In a period of 55 hours starting on the morning of March 22, shares in Chinese vaping company RLX Technology collapsed 54%, slashing more than $16 billion from the startup's market cap. The slump continued through the week as investors sold on the news of a potential industry crackdown by China's tobacco regulator and the Securities and Exchange Commission's announcement that it would start enforcing a law to require Chinese-listed companies to provide audits or risk being delisted. It was just another twist in the rollercoaster history of a company that rose from nothing to become the largest e-cigarette brand in China in 3 years. Just 2 months prior, it raised $1.4 billion in a blockbuster IPO on the New York Stock Exchange that catapulted 4 of its co-founders into the ranks of the world's wealthiest. Among them was CEO Kate Wang, 39. One of a record 57 self-made women billionaires from China, Wang was worth $9.1 billion on the day of the IPO, thanks to her 20% stake in RLX. Now worth $2.9 billion, she claims to be utterly unfazed by the stock gyrations. "That doesn't bother me," she told Forbes earlier in March, noting that she doesn't even have a brokerage account. "Every day I focus on my work, which is problem-solving." Wang has had her hands full guiding RLX from an idea in 2017 to a behemoth that has grabbed more than 60% of China's burgeoning e-cigarette market, according to Shanghai-based China Insights Consultancy. Despite growing mistrust of vapes by regulators and a global pandemic that puts vapers and smokers at higher risk, RLX's sales grew 147% to $585 million in 2020, with a small net loss of $20 million. That caps off a meteoric rise from the $19 million revenues RLX reported in 2018, its first year of operation. With only slightly more than 2% of China's 308 million smokers using e-cigarettes, compared to nearly a third of the 34 million smokers in the US in 2019, RLX has plenty of runway. "This sector will continue to grow at least for the next 20 years, says Tristan D'Aboville, executive director and analyst at brokerage firm William O'Neill. "Given the size of the population, China will be the next big market. Yet serious threats lie ahead." In late March, Chinese regulators published draft rules that would classify e-cigarettes as tobacco products and potentially bring them under the control of the state monopoly, China Tobacco. That could cause RLX's hard-fought market share to evaporate if authorities choose to regulate vapes in the same way as cigarettes, rather than as ill-defined tech devices. Stricter regulation would decimate the domestic e-cigarette market, says Patricia Kovacevic, a lawyer who specializes in compliance for tobacco and vaping companies. RLX counters that it's still unclear how or even if the rules will change, and that it plans to submit feedback to regulators by April 22. Last year, the company also established a bioscience lab to study the health risks of e-cigarettes.